From the floor of the CME Group, this is Danny Riley on today's Catch Close. Oh, I get mad. And the name of this video, Crude Oil and S&P take another duck. Whack, whack. The high of the day in the S&P came in at 2023.20 early in the morning. The low came in at 1984 even midday. And last, we're 2004 even. We're down 11.9 handles. Total volume, 2.3 million minis trade and 9,000 big S&Ps trade in the pit. MOC, we had 50 million to sell. Tomorrow, we have the MBA purchase applications. We have the ADP employment report. We have the Gallup U.S. Job Creation Index. We have the international trade number. We have the EIA Petroleum status report, the FOMC minutes. Charles Evans speaking. And I want to remind everybody that Alcoa kicks off the earnings season on Monday, January 12th. Now look, crude oil futures did take another duck. They got all the way down to 47.56. That's the CLG 15 on the CME. The S&P futures that closed at 2016 sold all the way off down to 84.5. That's a 35 handle decline. From the high of the day at its 2320 level, or 2375 high, the S&P sold off a total of 44 handles, and then after it made its low, it rallied all the way back up to 2009.75, and that's a 26 handle rally, and they're kind of coming down a little bit late in the day, but they always do that after they rally like that. Now look, I tried to point out to you guys, the volatility's back. It really is, and you can feel it all over the place. You know, I think as the S&P, I asked one of the guys from SocGen today on the instant message if they would have to reweight the S&P, you know, after some of these oil companies don't add up to their weighting in the S&P. He said he didn't think so, that some of the companies would just end up in the mid cap. But as I recall, once this kind of weighting stuff gets affected, they do something called what they call a switch or a rebalance. Well, we'll have to see about that. Now, the other part about this, and I want to be very clear about this, you guys. Look, I haven't had a good feel for this, and I took a little heat. I wrote the opening print this morning. I said that I thought the rally would start today. I didn't know that the S&P was going to do a big duck like it did, but yet the S&P has come back pretty good. Now, I don't know what this, I can't say for sure what I think this has got to do with, but what I think is once the customers are forced to roll lower and the margin calls are sent out by the clearing firms, and then you get that forced liquidation, you always get that snapback, and I think today was the day for that. Now, like I said, there's a lot, I said earlier this week, there's a lot of big economic reports tomorrow and the FOMC minutes. And you know what? I want to end this by saying that as bad as crude oil looks, I think it's extremely oversold. Everybody thinks it's going in the tank now. And my own feeling is that crude, the next $3 in crude is going to be up. And if that's the case, I think the S&P goes for the ride. Personally, I bought some cheap calls today, and I'm going to see how that plays out. We'll leave it like that. I'll see you guys tomorrow on the opening print.